Hello, it is Friday, the 8th of February, 2008. This is Brian Shannon from alphatrends.net, and the market has closed. We had a mixed market today. The S&P 500 lost 90 cents, or about 2/3%. And you can see that today's trading did form an inside day, meaning that it didn't make a higher high than yesterday or a lower low than yesterday. So kind of a more neutral type market, but obviously there's always going to be opportunities from a shorter term time frame that we'll look at in a minute. For the week, though, it was another negative week after we've seen that big rally the previous 2 weeks. We're giving up some of those gains, and the volume was a little bit lighter in here. I don't think you want to read too much into that. The important thing here to realize is that this prior level where we had support did come close to acting as resistance. Market fell a little bit short of that, in fact, but overall it's a negative environment, and you can still see here that the most important level of support near term is this 132 level, and this market's looking a lot like the NASDAQ did a couple days ago when it broke down through its relevant support at $43.50. We'll look at that in a moment. But you can see here that this support is being tested more frequently, and that's not a good sign. We've got lower highs coming into it. That tells us the sellers are getting more aggressive price-wise. They're not waiting for the bounce up to 136 or 135. Now they're taking control at 134. We've got a declining 5-day moving average indicating the intermediate-term trend remains lower. And the more often that we see these tests of support, the more likely it is that the buyer's resolve is diminishing in this area. And once again, we can point to this as a head and shoulders pattern, which would indicate a target. If we measure conservatively, let's just call that 139 and call this 137. That would be 7 points. That would give us a price target down near 125. It's not a call for a move down there, but that's just what it would indicate, and it's a potential possibility. And we always want to be aware of all different scenarios that may be developing in the market, as we see here. So again, don't trust this market. It's in a downtrend, and this 132 level is going to be pivotal early next week. So yesterday we were looking for maybe a lower high to develop, and it looks like that's what we're getting in here. So it's becoming weaker in here, and you can see that most of the day the sellers had control. It kind of they took back control late in the day, but attempted to take back control late in the day by moving above that average daily price. But the sellers came back in and pushed it down for a move below that daily VWAP. If we look again at the since the Federal Reserve has cut interest rates, and that's right here at the 75 basis points, and then again right here 50 basis points, the average price this market is traded at is about 134, meaning that the average participant who purchased any S&P 500 in here is losing money after the Federal Reserve. So again, it just shows that the Federal Reserve doesn't always, doesn't create stock market trends. They're trying to react to more economic indicators and that sort of thing. What we need to focus on, and the only thing that pays in the market, is price action, and price action continues to deteriorate and is looking more likely that it will break down through that 132 level. Let's see, if it breaks below there, there's, I think, a good chance for at least a test of these lows, and then maybe a little bit further lower as well. But for it to turn bullish in the intermediate term, I think you have to at least take out this 135 level, and I don't think there's a good chance of that. But again, we always want to be aware of all potential scenarios just in case. Semiconductors, they're just continuing to look terrible. Again, failed moves in here, shouldn't surprise you when we've got a primary downtrend, and enough said about the semiconductors. The recent relative leader has been the IWM, or Russell 2000. This was down, though, 50 cents today, about 0.7%. So it was actually the weakest of the sector, the overall markets that I follow here. And you can see here that we've got a little indecision based on these moving averages crossing, but the bigger picture remains much more bearish, obviously. This 73 level is the real important area for this market over the next several months, I would think. Getting above and holding above there for more than at least a couple days will be something that may turn the nature of this market to more neutral. But continue to look at this market as guilty till proven innocent. We're in a very bad downtrend. This 73 level here again on the daily time frame. You can see how it came close to acting as resistance. That's where we're looking for resistance early in the week, based on the prior support as well as a declining 50-day moving average and some Fibonacci levels. In here, what we've been monitoring is this little uptrend. And also the support near about 67.75 or so. We see, again, more evidence that we might be tracing out a head and shoulders pattern in here as well. So the market came up to and was trapped underneath the declining 5-day moving average, as we often see. So guilty till proven innocent still. You can look at this and say, well, what about this higher low? Well, we're going to need to see at least a move above 71 to have any belief that this market might run back up and test that $73 level again. But for now, again, it's guilty till proven innocent on all time frames. The 10-minute time frame, you can see that I think breaking probably below 68.50 is going to be big trouble for next week. That would bring it down to at least this level, and if that 67.75 type area fails to hold, then I think you've got a pretty good shot of taking this measured move here as well. And we could just take that and grab it like this and show where it would equal the measured move, would bring it down towards about that 64.5. All I did was take this, the height of this. I just grabbed that line, and I'm pulling it over here to show you if it had broken, if it breaks the neckline in this area next week. Well, the height of that pattern does give us a target down near that 64.5 level. So it's just that the height of this from here, the height of the head down to the neckline, subtracted from the breakdown point right here, gives us a target near 64.5. Again, it's the best way to play that, I think, is probably the TWM, and you can see here a real nice inverted head and shoulders pattern. This looks very bullish. We've got the shoulder, the head, the shoulder, and here's the neckline. So if you wanted to trade the bearishness in the Russell 2000, the ProShares Ultra Short Russell 2000 is a great way to do it. In this case, we would take this. Let's just go to a 30-minute time frame and take that. We can see the height of the pattern here, and then we could add that. So we could take this from about 84, give us a price target up near about 95, which is the highs that we'd seen just a couple weeks ago. So those ProShares are a great vehicle for trading and getting the leverage and the exposure to the short side by getting long. The NASDAQ 100, you can see that it was battling in here today with the level that we've been watching, which is that 43.50, 43.65 area. This is the level that I had shown a couple days ago, and what I was talking about earlier when I was talking about the S&P 500. Let me just show you that this level right here kind of looks similar to the 43.50, 43.65 level for the NASDAQ 100. And you saw that the more times that this support was broken, then it failed after this lower high. And now we've got this support, which is broken, is now looking like it's acting as resistance. There's sellers in here. Price has memory, and the volume had contracted initially on this rally, but actually we've seen a little bit of increase in volume on the first test, and then diminishing. And this was today's test. Let's look at the 10-minute time frame for a little bit more clarity. And I posted that a chart of it right about when the market was here. Earlier on my blog today, so hopefully you saw that. But it came back close to that level here late in the day. This declining 5-day moving average says that basically if the market, let's say it gaps up above that level to 44, 44.05 on Monday, don't trust it. Well, it's still got this declining 5-day moving average. Don't chase the market, in other words. Wait for this 5-day moving average to show evidence that it might be flattening out, if this market is going to show some short-term reversal. Again, with the primary trend clearly as bearish as it is, it's not likely for it to reverse. But we've seen all kinds of crazy moves in this market, and if you're not playing a very strong defense, like I always say, defense wins the game, then you're going to be in big trouble here.